That's not fun, man. It can send you into financial distress. Hi guys, I'm Fiso. Welcome to my channel. Today I'm talking about a huge tax bill. Okay, this is the thing. We understand bills, and we understand all the other bills that we have, whether it's our bills in our own homes. We understand all those, our phone bill, our gas bill, our electricity bill, whatever bills, we understand those bills. But there's one other bill which can be major, which can really have a huge impact on our finances. That's the tax bill. Right? That's one of the bills that people don't think about throughout the year. We just ignore it. We better put our head under the sand. We forget about it, and we just hope that we're gonna get a refund at the end of the tax year. Okay? But this is what I found out. There are some errors that people continuously make throughout the year, and that lead to them finding themselves with a huge tax bill. So this is what I want to share with you today, so that you do not find yourself in that position. Because you know what? When you do your tax return, it's really good when you get a refund, but not when you get a bill. Like, just like that, you've got 30K that you need to pay, or 50K, or whatever the amount is. That's not fun, man. It can send you into financial distress. Taxation is country specific. So in this case, I'm looking at Australia. So the examples that I'm gonna give, or what I'll be talking about, it's really specific to Australia. However, some things might be applicable in your own country, so you might need to check that. Okay, so this is what I found out, the most common mistakes that people make. So when you start a new job in Australia, usually you get a starter pack. In that starter pack, there is what's called a tax file declaration form. The tax file declaration form, you remember it? I always say it's pink. Is it pink or reddish color? You'll see it here on my video when I'm talking. Anyway, that one, when you get that form, your employer gives it to you so that you instruct them how to tax you. Okay, you put your tax file number there. The other thing you need to state is whether you are claiming the tax-free threshold. Okay, tax-free threshold or not. In Australia, as I'm talking right now, you can earn up to 18.2, I think 18.2K without paying tax. 18.2K without paying tax. So which means any money that you earn above that amount, you have to pay tax on it. So if you've got 2 jobs, what you are supposed to do is to claim tax-free threshold from 1 job, not from 2 jobs. If you've got 2 jobs, some people who have 2 or 3 jobs, employer 1, they tick claim tax-free threshold. Employer 2, they tick claim tax-free threshold. Employer 3, claim tax-free threshold. So this is what will happen. For the whole year that you are working, your employer will be taking a lower tax because you are claiming that tax-free threshold. But then at the end of the tax year, when you do your tax returns, then all your income is added together from your 3 jobs, and then only 18.2K, as at the time that I speak, is the only amount that you shouldn't pay tax on. And then all the extra income, then it means you were supposed to pay more tax, so you would have paid less tax. So when you do your tax return, you find yourself with a huge tax bill. So if you've got 2 or 3 jobs, just claim your tax-free threshold from 1 job. Don't claim from all the other jobs, because at the end of the day, it will come back to bite you. From the employer perspective, the employer doesn't check to say, oh, did you tick this properly, or are you sure you're claiming from this job? The employer doesn't check that. It's not the employer's job, because that form you have to sign, put a declaration at the bottom. So the employer's job is to say, okay, do you want to claim tax-free threshold? Yes, you tick, you sign. That's it. The employer takes that and deducts and they do their payroll on the basis of that information. So yeah, don't make that mistake. My second one is the debt, the student debt. Okay, whether you're getting a help debt or fee help or there are different types of student loans in Australia. Okay, if you have a student debt, when you are filling this form again, you need to tick that you have a debt. To say this is the sentence here, do you have a help or HECS or whatever debt, then you have to tick yes. So some people, this is what they do, they don't tick that. They just go like, oh, if I don't tick that, then when we accountants or payroll people are doing your payroll, we won't deduct the help or the student loan component because you say you didn't disclose that you have it. Okay, then come the end of the tax year, you're doing your tax returns now, all your money is added together, look at how much you've earned, and then if like there is a threshold, again it differs from year to year. Maybe they say like if you earned, maybe if your taxable income is like, let's say just a number, I'm not giving you the actual figures here, maybe if your taxable income is like 45k, you need to pay a certain amount of help debt. You know what I mean? So that's how it works out. So if your income has gone above that threshold, then when you do your tax returns, then you get charged that help debt. The government are saying, okay, this is the amount that you should have paid through the year, but you didn't pay it, so now we're taking it. Okay, so then don't get caught on that one. Always make sure you tick. If you've got a help debt, disclose it, because at the end of the day, when you do a tax return, it will come out. Okay. My third one that I've seen is I'm talking about especially people with families. Okay, people with families with kids. Some people receive some family tax benefit, childcare subsidy for the kids. Okay, so at the end of the year or at the beginning of each year, people would disclose. You have to actually, you get is it an email or a letter, I can't remember, where you have to say what your estimated income for the next financial year is. So you say your estimated income for the financial year, right? And then maybe during the year, a lot of people, like, they will go, maybe, I don't know, you want to buy a house or something, then you decide that, okay, I'm gonna pick some do more overtime, pick some whatever overtime hours, and then do overtime. So when you do more overtime, that changes your estimate, right? Let's say you said your estimate was 60k, and then you do a lot of overtime, and then end of that year you make like 80k. So what happens is that all the family tax benefit or all the childcare subsidies that you were paid, they would have been based on 60k, and then now your income, the actual income is 80k, and then Centrelink now says, okay, we paid you more than we should have paid you, so you need to pay that back. So it all comes out when you do your tax return. Okay, so yeah, so what would I do if it were me? I tend to always err on the conservative side. I'll put my estimates higher, a little bit higher, or if I know that I always do overtime or get more money, I'll always try and make my estimate a bit more to avoid that, so that I pay a bit more tax. I prefer to get a refund than to pay tax, so that's what I would do. All right, so yeah, so my last one is, if you've got, you know, like some other income, like unearned income, women, like maybe your parents are rich, kind of rich, and they've got trusts, and you get distributions from the trust, like you're a beneficiary of a trust, or your grandparents, you get a distribution from your trust. If you get it for the first time, it usually creates a problem because ATO want to know about it. So you find that maybe at the end of the year you got a 50k that you were not expecting. That 50,000 is on top of your other income that you have, and then tax office will now say, or when you do your tax return, now you wouldn't have paid tax on that extra money, that 50k. Okay, and then you find yourself with a huge tax debt. So usually in the second year it becomes okay, because you start paying those installments, you start paying your tax basing on your estimates for last year. So the next year, maybe, you know, you start paying maybe based on 53k, that assuming that you will receive around the same amount. So as long as you are paying it month by month, so at the end of the year it kind of evens out, and then you don't find yourself with a huge tax bill, unless if you've got a huge variance and you receive way more money than you expected. Yeah, so anyway, so these 4 things to me, I've really found out that they've consistently resulted in people finding themselves in huge tax bill. So this is the thing, I am not a fan of surprises. I hate surprises, like especially when it comes to finance. I don't like surprises. I like to know what's coming. I like to plan. I like to be organized. I like to know what I'm expecting. You know, I don't do well with surprises, especially in the money section, like I said. And then I don't mind if it's a money coming in and it's an increase, but I do mind if it's a cost or if it's a bill. I do mind. So I like to be organized. And so if you've found yourself in any of those situations where like you can't explain your huge tax bill and you need someone to help you, feel free to contact us on our website, Instagram or Facebook page, or the link at the bottom of my YouTube channel, right there. And yeah, like I said, I'm a fan of planning. I like to plan. I like, you know, to know what's gonna happen way beforehand. I'm like future forecast. I look at the future. I want to know what's going to happen, like have a kind of an idea of what's going to happen and avoid these things happening to you and me. Be prepared. Always be prepared, okay? Hope this video was educative. I know it's a little bit of jargon there when we talk about tax, yeah, but hopefully, you know, you are able to understand the little bits and pieces here and there. Again, you know, you need someone to help you, feel free to contact me. Thank you for watching. Hope you like this video. Thank you. Bye.